Alright, Happy New Year, everyone. First video of 2023, so we're excited to be bringing out a lot of new things coming out this year. We have a lot to talk about today, just mainly about what we expect for 2023 with the recession fears going on. We have some economic updates and a little bit of what we expect from seasonality going on as well. So let's go ahead and get into this. Alright, so economic outlook. We have the ISM manufacturing PMI coming out this week, forecasted at 48.5. Previous was at 49. Now remember, we're starting to put inflation kind of in that rearview mirror for now. We are in this disinflation era where inflation could come back raging, but right now we are seeing that the numbers are trending down. So we are starting to push our fears away from inflation to more of a recession. So you want a lot of this economic this data coming out a lot better than expected, just to show that the recession is actually going to, if we do get a recession, it's going to be less than worrisome than what we expect. Now, we also have the FOMC minutes coming out this week, so expect a lot of volatility coming out with that. We also have non-farm payrolls and unemployment rate coming out. So again, we want this economic data that's coming out this week, non-farm payrolls, ISM manufacturing PMI, unemployment rate, ISM manufacturing PMI. We want all of this data to come out better than what we expect. So remember, the Federal Reserve wants the unemployment rate higher. We also want the non-farm payrolls to be, we're expecting that the labor market is going to continue to be easing off. So we're going to talk a little bit today about bullish seasonality. So you may not expect that we like to talk about politics, and we don't want to bring politics really into the stock market because it can cause problems and arguments between traders. But the fact is that politics does have a factor in how the market moves. Now, the good news is a Democratic president and a Republican House in the history creates the best market performance. The pre-election year historically is bullish. Remember, next year is presidential election. This past year was midterm years. And all midterm years is always historically bearish, which what we got along with an inflation data really kind of pushed the market down harder than it usually historically does. But this year historically is bullish. Now, after the year after a midterm year, we get an average of 16.8% return for the S&P 500, which is insanely good, especially with how the market has done this past year. And we've seen a lot of short interest really pushing up higher, pushing down the market. So I mean, we could possibly get higher than this. Of course, we have a lot of other factors going in, and we'll talk about that one as well. But from a technical analysis perspective, we have the MACD, which is pushing down. It's almost starting to turn back up. And then we also have the stock RSI is oversold on the daily. And on Friday, which is this past Friday, on this last trading day of the year on December 30th, we saw a market on close order, and it came in at 6.1 billion buy side, which is very, very bullish. It means money is flowing back into the market, which could possibly go along with this correlation of seasonality. Remember, billionaires have been making money off of this seasonalities year after year. So do not think the market has to continue to go down. Remember, the market is not the economy. The stock market is forward-looking, and if we get better data and everything going along with seasonality, we could seriously get a push-up. Now, these are just some charts that I just wanted to show a little bit. It kind of just goes with the correlation. You can see in the green bar is where that political alignment goes, where with the Democratic president and Republican House, ever since 1949 to 2021, you can see 16.4% gain on the Dow Jones, which is the bullish out of any possible political view that you can have. And then on this next one, you can see on the pre-election year seasonal pattern from 1949 to 2021, you can see that it's been historically bullish. Now, there are some things that we want to talk about a little bit that can put a damper on this bullish seasonality. So here's just a couple of things. We've had some recession fears. Again, we want this economic data to show more bullish news, less recession fears going on. We know that there's probably going to be a recession sometime in between Q2 and Q4. We just don't know how bad it really will be. So the better that this economic data comes out as, it's going to show whether we're probably going to get a worse recession than we thought or a better. And of course, another thing that could hurt the seasonality is inflation coming back. Again, we've seen multiple months of inflation going down, but this is a disinflation era. Disinflation is just a temporary era or area of time that actually just pushes inflation down. We don't really see prices going down as much, but we do see that inflation can come back. And then also some macro environment events that could happen that come out this year. We've seen China really getting hit with COVID right now. They canceled a lot of their zero COVID policy. If they do come back with the zero COVID policy, it could put a damper on the stock market just because of the supply chains going into the new year. Also, the China and Taiwan tension, North Korean tensions with South Korea, and of course Russia and Ukraine. So that's really the gist of it. We do see a little bit of bullish seasonality going into this year, but we do have to keep into mind things that can affect this year's market. But I am so far bullish on the seasonality. So let's go ahead and take a look at some of the technical analysis aspect here. All right, so technical analysis here, we're going to look at here on the weekly. We just seen the SPY just absolutely get pushed down ever since this past January. We just seen this giant push down as the year's going on. We have these little lower highs going on along with just kind of push more down more and more. Have we hit the bottom is the main question that I've been getting. Again, I think a lot of the thing that has to go with have we hit the market bottom. I mean, truly nobody really knows, but with bullish seasonality coming out this year, with that MACD so low on the weekly, there's a lot of upside to come. We're not oversold anymore on the weekly. Looking at the daily here, we do have this daily MACD starting to kind of turn back around along with the daily stock RSI. It's been really having a hard time pushing it lower. We've been having a lot of lower volume pushing down the market this past week and a half. So I'm leaning a little bit more bullish as of now, and I'll let everyone know if that thing changes. But right now, I'm bullish. Now, we have to remain that long-term bear until we completely break through this long-term resistance line. And the reason for this is we've hit it 1, 2, 3 times so far, and we've just been rejected every single time. So as soon as we break out, expect massive money coming back into the market. We could see a very, very big short squeeze if we do break above it. If we do come down, I do expect some support around the previous bottom, around 362 to 350 area. Now, I'm just not seeing a lot of selling going on right now. I see a lot of money coming out of the market, but I really think what happens this year depends on how the recession starts to look. Now, looking at SPX on the daily, we can see right here that you see this kind of consolidation. We saw this big sell-off, consolidation. It could either come back or it could continue to go down, but we're not seeing this selling pressure right here that we normally do. The stock RSI was oversold. It comes back a little bit. Usually you tend to see some really big selling pressure, but it hasn't been coming back. It's just kind of consolidating here along with the MACD starting to slowly turn back around, leading towards that bullish seasonality of this year coming out. So we will continue to remain that long-term bear until we have this daily breakout or weekly breakout on that main resistance line. And Apple has been absolutely hammered this year. It completely broke below its yearly low, and we're just continue seeing a big sell-off. But remember, Apple is the biggest sector, or it's the biggest holding for the S&P 500 and the NASDAQ. So if you can see this MACD starting to kind of want to turn it back around along with the stock RSI. So I'm leaning more towards this early year seasonal bullishness. But remember, we have to keep up with a lot of this this macro environment news. So right now, where I'm sitting, I'm leaning very heavily bullish into this year, and until I see otherwise, I will continue to be bullish as all technicals, along with the the seasonality of the bullishness is going along with it, and I'm seeing a lot of money start to kind of slowly flood back into the market. So we could get a little bit of that early year rally, but let's continue to watch that. I really want to continue to watch this, the recession news coming out. Remember, we'll keep up with the macro environment news and the economic data. We're going to have a great year. I want to double my portfolio by February. So everybody continue to watch out. I'll be looking for some great plays. I think we are going to have a lot better of a year than we did in 2022. And there are big things to come. So everybody if you like this video, please don't forget to like and subscribe. Thank you to all my subscribers and fans. And everybody just continue to have a great weekend. Have a happy new year and stay safe out there. God bless.